Okay guys, it is time for a new update here on the Bitcoin price, and I can already tell you, yes, a lot has changed over the last 24 hours, although the price almost didn't move at all. As you can already see, I didn't take any changes at my $3 million short position at the moment. It is still remaining in a $165,000 profit. But guys, I can tell you, we are planning to keep an eye on the charts, especially within the next 24 to 48 hours till our weekly candle closes, because we have a lot of very interesting price levels to keep an eye on to know what we can expect from the next week's Bitcoin price, and if we need to expect the price to even fall lower after all that correction we have seen within the last couple of days and approximately 2 weeks. First of all, I want to thank everyone out there that is always leaving a like here on my videos, subscribing to the channel, activating the bell so you don't miss out on any future uploads. Thank you very much for that. But now let's not talk too much, because I don't only want to talk about the smaller time frames today. I also want to take a look at the weekly and also the monthly candles, because there is very interesting similarities playing out, not between our last bull and bear market, but between the 14 to 15 year 2014 to 2015 bear and bull market, guys. There is some similarities playing out in the current bull and bear market scenario, so I also want to talk about that in a second, so you have a nice and good long-term overview to know when it's time to switch from maybe opening a few more scalp short positions than long hedge positions back again to only opening long swing positions. Now let's jump into the smaller time frames first. As we can already see here on BitGet actually very well, we have these two upward sloping support and resistances, right? We can see that very clearly here with a few touch points, actually both of them, and we can see that the price is right now trading directly between them. We have seen brutal wicks to the upside and also the downside, which indicates us that the bulls as also the bears don't really want the price to break these certain price levels, because both the bulls and the bears know that either when the $22,500 level approximately or the $22,200 level approximately breaks, we will see a massive follow-up in that direction by either the bulls and the bears, and that's why everyone is pretty much right now remaining on the sidelines. We are seeing quick, very aggressive wicks when the market for a short amount of time believes that we will go into a certain direction, but we can see that for the bears as also for the bulls there is not really follow through coming for, and if a decision is taken, it is definitely not visible in the charts yet. We will see it slowly developing, most likely within the next 24 hours. That's why keep these price levels in mind as a first small indicator, and this is really only on the 1 hourly time frame. I, as you know, normally don't even look really at the 1 hourly time frame. I normally only use the 4 hourly as my smallest time frame to trade. But in general, guys, I mean, we are forming here a small symmetrical triangle, so you can keep that in mind or an eye on it a little bit if you want to have a small heads up in what direction we are most likely heading. But in general, really wait for the most important resistances on the 4 hourly time frame to break before you are making a decision. I'm going to do the exact same. I'm going to take profits off this short position if we close a 4 hourly above the 22,500, and I am for sure scaling up this short position if we are closing a 4 hourly below the $22,200 level, because not only is that going to impact the weekly, but for sure also the daily. And if we are really now falling into the direction below the $22,200 level, we would for sure have a confirmed breakdown below our very important upward sloping support and resistance here, right? And then it would be very likely that at the $21,600 level we might fail to hold the support, and we would see a massive M pattern breakdown, potentially all the way down to the $18,000 to $19,000 level. And I just want to be prepared for that scenario. So let's just keep an eye on the charts and find out what breakout is going to occur first, because as I said, it will have massive impact not only on our daily candle, but then especially also on the weekly time frame, where I mean we still are also potentially forming an M pattern here on the weekly time frame with a beautiful rejection perfectly of the $25,200 to $25,300 level, the level I mentioned to you guys I am keeping the most attention on for the weekly time frame actually, and we got rejected from that. I mean, this is also one of the reasons why we are in this massive short position right now, already scaled up. And if we are falling now within the next 24 hours lower, I mean, there's only one final day remaining. So, yeah, not even 48 hours remaining. Till then, this weekly candle would need to recover for a bullish close back above the $23,000 level. And since this is definitely almost impossible if we break below the $22,200 level, I can be sure then to scale up my short, because the successful breakdown out of this M pattern on the weekly and the daily is then also most likely going to come within the next week. But in general, guys, keep in mind a little bit that we are still expecting the bottom to be in very, very soon. I mean, the only chance pretty much why I think it's even possible that we are seeing this final capitulation relatively quickly is because of the similarities of the current bull bear market scenario compared to the 2014 to 15 one. If we are taking a look at for example, the 2010 to 2012 bull or 2013 bull and bear market, we can see that Bitcoin rose rapidly. We saw a relatively strong and fast bear market. We saw a pump back above the 10 monthly moving average here in yellow, and this was the start of our next bull run. We had a little bit, we used it as support, and we saw our next bull run. Now looking at the 2013 to 2016 bull and bear market cycle, I mean, we can see a lot more quicker that there was one thing that pretty much happened, and we saw a break above the 10 weekly moving average. We broke above it slightly, actually remained above it for 1 or 2 weeks, but then we saw within 1 month a final massive capitulation, actually a monthly candle that corrected from its opening almost 50%, which is absolutely crazy, but that's not really relevant for us right now because such a percentage move is rather unlikely for Bitcoin. Nevertheless, we saw this massive capitulation within 1 month before we then confirmed the next bull market. And before that, we saw a dump below the 10 moving average, but we pretty much used it a little bit as support. If we would be looking at the weekly now, the closes are not perfect. We would be using it as support, so we would see like a small second run up. And what we are seeing now is, first of all, the 2018 to 19 bear market and bull market. I mean, it's super similar. We see a massive run up, as in the 2011 one, we see a massive run up, a relatively fast bear market, and then we see a pump above the 10 moving average. We pump above it, we see some sideways movement, In this case, yes, I mean, we have to say there was this black swan event called Corona, but let's think about if that didn't exist, we would have just saw a small sideways movement and then started pumping again. And now looking at the 2014 13 to 16 bull and bear market, it's very similar to our current one. We see a run up, right? And what happens here is very interesting. We see this bounce after the first big correction of the 10 weekly moving average, similar to the 2014 one. And then we fall below it. I mean, we pump a little bit more hard here than in 2014. But this pump was only because of Elon Musk and Michael Saylor and all that retail FOMO that was in the markets. I mean, on-chain data already showed that the bulls, that the whales were already redistributing their supply into the market. So we knew that this move actually was not a real whale-driven bull market like we see them usually, but it was actually a bull market driven by mainstream media attention. So if we're also removing that a little bit as like the Corona dump as an event that was not caused by charts or technical analysis or by the whales movement, but just by retail FOMO, this actually looks very similar to the bear market that started in the early 2014. And what we are seeing now is also we are breaking above it with a monthly candle that is actually wicking to the upside. We see the exact same. Now our monthly candle is already turning bearish again, with the extreme danger of this month just being at the start, right? We only have 3 days so far in this month. So if we now see a bearish weekly candle close, it's easily possible to see a final sell-off, a final wick back below the 10 monthly moving average and then quickly back above it. But that's the only reason why I am still a little bit careful. If we get these last remaining fears pretty much out of the market by the charts or certain news events, then I mean, I have to agree that we were pretty much right. The bottom was found between $16,000 and $14,000, and we can pretty much relax and enjoy the start of the next bull market, where we will shift our attention definitely back from short scalp positions back to swing long positions. So guys, if you want to stay up to date, subscribe to this channel, activate the bell. You won't miss out on any trading videos that way and on any of my upcoming trades. Besides that, As always, thank you also for all the people that are commenting and leaving positive feedback. And now guys, keep an eye on the charts, because I can already tell you the $22,500 and $22,200 level will be very, very relevant within the next 48 hours till our next weekly candle close. But now guys, we're going to see us. Till then, bye. Bye.